Thank you, Dr. Posen. Let me start with you, Dr. Taylor. As we discuss the mandate of the Fed, and as those of us who believe we ought to refocus it back to rules-based price stability, which protects the value of the dollar over time, good money as it is. Should we have that mandate, does the Fed ignore employment factors in pursuing stable prices over time?
No, absolutely not. The experience, it seems to me, with this is when the Fed took specific actions to try to deal with unemployment. The 70s is an example. It backfired. Unintended consequences were high inflation and ultimately higher employment. Higher unemployment. Unemployment got to be 10.8% by the end of that episode. I think the recent experience is similar. One of the reasons the Fed held rates low in 03, 04, 05 was a concern about employment. What has happened? We've had much higher unemployment than anyone would want. So the history is pretty clear that these unintended consequences of these actions lead, and it's because of policies that are chosen that are counterproductive. I think the problem with the dual mandate now is it's really used as an excuse to do more interventions, more discretion than would otherwise be the case. So my hope that a focus of the Fed to a price stability, which would generate more over all economic stability would be quite positive for unemployment. We got a lower unemployment rate than people are legitimately concerned about if you remove that mandate. It's really monetary policy works with lags. It's dynamic. It takes time. And what we've seen in history is these efforts go the wrong way, and it's a concern to me.
Do you believe the Fed's current accommodative monetary policy will help close the growth gap, or do you view a more rules-based policy as helping remove the risks that at this point are a roadblock in economic growth?
No, I don't think they will help. In fact, the history of the last 4 years is that they have not. We've had really the weakest recovery in history for a downturn like we have had. And it's good to say positive things, to be sure, but this is a very disappointing expansion, very disappointing recovery. And there's a lot of reasons people point to, but I think one of them is the uncertainty, the great deal of interventions that the Fed has had here. And so to me, and then history tells you, economics tells you, to get back to a more predictable policy, a policy where there's not so much interference with the economy, would actually help the recovery, and I'm hoping they do that.
Thank you, sir. Dr. Posen, I read your testimony last night. You touched on a lot of key points. I want to pursue your first point you made, which is there's a right way and a wrong way for a legislative body to set goals and hold their central bank accountable. The approach we're taking is to try to create a constructive, brutally bipartisan, in fact, focused a bipartisan approach over the next year to look both backwards on what is the role of the Fed in the economy in the first 100 years, financial security, all that, and also to create sort of a level playing field for ideas on what that role should be. In your view, is that generally the right approach versus, as you've identified, there's some damaging approaches as well?
Mr. Chairman, no, I am very delighted to be here, and as I said in my testimony, part of the reason I'm delighted to be here is because you and your colleagues and the staff of this committee are framing this in a serious, objective, and I don't know partisan, bipartisan, but open to debate way, and that you would be open, I would hope, to evidence. As my colleague John talks about history, I interpret the history a little differently than he does. I would hope we could have frank discussion about that. And I think the key word that I used in my testimony, and again, I know for this committee, I don't need to tell you that, is you don't want this to be about bullying. You don't want this to be about, we don't like the Fed, what the Fed is doing right now, or we're worried that the Fed isn't doing enough of X right now, and therefore we threaten a change in the Reserve Act, Federal Reserve Act, to get right now what we want. When you frame it, Mr. Chairman, when you and your colleagues frame it as a long-term consideration about what for the next 5, 10, 20 years, I hate to go beyond that, but 5, 10, 20 years should be the Fed's goal. I think that is an entirely legitimate and constructive focus.
Great. Thank you, Dr. Posen. Vice Chairman Klobuchar?
Thank you both.